Welcome! Today, we're diving into the new no tax on overtime deduction rules for 2025. If you earn overtime pay, you might be eligible for a significant tax break thanks to recent changes in federal law. This deduction, part of the One Big Beautiful Bill, allows qualified workers to reduce their taxable income by thousands of dollars. But what does this really mean for you? Over the next several scenes, we'll break down who qualifies, how much you can deduct, and what steps you need to take to claim this benefit. Let's start by understanding the basics of this new deduction and why it's making headlines for the 2025 tax year. The One Big Beautiful Bill, signed into law on the 4th of July 2025, introduced several tax changes, including the overtime deduction. This law extends some tax cuts, adjusts energy credits, and reforms various federal programs. For workers, the most exciting part is the new deduction for qualified overtime pay, available from 2025 through 2028. This means, for a limited time, you can claim a deduction on your federal return for a portion of your overtime earnings. However, there are specific rules and income limits to be aware of. In this video, we'll guide you through the details so you can maximize your tax savings. The phrase "no tax on overtime" refers to a new federal tax deduction for qualified overtime compensation. While the name suggests you won't pay any tax on overtime, the reality is a bit more nuanced. The deduction allows eligible workers to subtract up to $12,500 of overtime pay from their taxable income, or up to $25,000 for married couples filing jointly. However, this deduction doesn't eliminate all taxes on overtime pay. Payroll taxes and, in some cases, state taxes still apply. Understanding the distinction is key to managing your expectations and planning your finances. The overtime deduction is retroactively effective from the 1st of January 2025. This means any qualified overtime pay you earn from the start of 2025 can be used to calculate your deduction for that tax year. The deduction is currently set to expire after 2028, so you have a 4-year window to take advantage of this benefit. If Congress doesn't extend the law, the deduction will end after the 2028 tax year. Make sure to keep good records of your overtime pay for each year you plan to claim the deduction. Not everyone who earns overtime pay will qualify for this deduction. To be eligible, you must be covered by the Fair Labor Standards Act, FLSA, have a valid Social Security number issued before your tax return is due, and you cannot use the married filing separately status. Additionally, overtime pay must be required under federal law, not just state law or a union agreement. If you meet all these criteria, you can claim the deduction, whether you take the standard deduction or itemize your deductions. Let's review the key facts. The deduction is available for tax years 2025 through 2028. The maximum deduction is $12,500 for individuals and $25,000 for joint filers. It's a below-the-line deduction, meaning it reduces your taxable income after your adjusted gross income is calculated. The deduction phases out if your modified adjusted gross income, MAGI, exceeds $150,000 for individuals or $300,000 for joint filers. If you're married and file separately, you're not eligible. You'll need a valid Social Security number to claim the deduction. Only qualified overtime compensation is eligible for the deduction. This means overtime pay required under the FLSA that exceeds your regular rate of pay. Specifically, it's the half portion of the time and a half pay. For example, if your regular rate is $20 per hour and you earn $30 per hour for overtime, only $10 per hour is deductible, the extra amount above your regular pay. Overtime pay above the FLSA requirement, tips, or extra pay for weekends or holidays doesn't count. Sometimes, overtime pay is higher than the standard time and a half rate, such as double time under a union contract or state law. In these cases, only the portion required by the FLSA is deductible. For example, if you earn $40 per hour for overtime when your regular rate is $20, only $10 per hour is deductible. The additional $10 above the FLSA requirement is not eligible for the deduction. This rule ensures the deduction only applies to federally mandated overtime premiums. For certain professions like police officers, firefighters, and hospital workers, overtime rules can differ. For example, firefighters may have overtime based on a 1-4-day work period, and hospitals may use agreements for overtime after 8 hours in a day or 80 hours in 2 weeks. In these cases, the overtime premium is still deductible, even if the calculation isn't based on a standard 40-hour week. Always check your specific situation to see how the rules apply. If you receive comp time, paid time off, instead of extra pay for overtime, the deduction still applies. The overtime premium is calculated based on your regular hourly rate and the value of the comp time you receive. For example, if you get 1.5 hours off for each hour of overtime, the deductible amount is based on the extra value you receive over your regular pay. This ensures that all forms of federally required overtime compensation are treated fairly under the deduction rules. To figure out your qualified overtime for the year, check box 1-4 of your W-2 form, or look for a separate statement from your employer. If these aren't provided, you can use pay stubs or other records. Remember, you can only deduct the overtime premium the extra half of your time and a half pay. If your total overtime pay is reported, divide by 3 to get the deductible portion. Keeping accurate records is crucial for claiming the correct deduction. Let's look at an example. Suppose Kay receives a statement showing $24,000 in total overtime compensation for 2025. To find the deductible overtime premium, she divides $24,000 by 3, resulting in $8,000. This is the amount she can claim as a deduction. The same formula applies if you receive comp time instead of cash. Understanding this calculation helps ensure you don't miss out on valuable tax savings. If you're paid more than time and a half, the calculation changes. For example, Dave is paid double time for overtime and receives $28,000 in total overtime pay. He must divide this by 4 to find the deductible premium, resulting in $7,000. If he had been paid time and a half, the total would be $21,000, and dividing by 3 would also yield $7,000. The goal is to deduct only the FLSA authorized overtime premium, not extra bonuses. Starting with the 2026 tax year, the IRS will require employers to separately report qualified overtime compensation on Forms W-2, 1099 NEC, 1099 MISC, and at Tusine, a Neo-Halfems Co. This change will make it easier for employees to identify and claim the correct deduction. However, it's still important to verify the amounts reported to ensure you receive the maximum benefit. Always double-check your tax forms and keep supporting documentation. The maximum deduction is $12,500 for individuals and $25,000 for joint filers. However, if your modified adjusted gross income, MAGI, exceeds $150,000, $300,000 for joint filers, the deduction is reduced by $100 for every $1,000 over the threshold. Once your MAGI reaches $275,000, $550,000 for joint filers, the deduction is completely phased out. This sliding scale ensures the deduction targets middle-income earners. For married couples filing jointly, the $25,000 deduction limit applies to your combined qualified overtime compensation. For example, if you and your spouse each have $15,000 in overtime pay, your total is $30,000, but the deduction is capped at $25,000. This rule prevents couples from doubling up on the benefit and keeps the deduction fair for all taxpayers. Suppose you're married, filing jointly, and both you and your spouse have $15,000 in qualified overtime pay for a total of $30,000. Your MAGI is $340,500, which is $40,500 over the $300,000 threshold. First, your deduction is capped at $25,000. Then, divide $40,500 by $1,000, round down to 40, and multiply by $100 for a $4,000 reduction. Your final deduction is $21,000, $25,000 minus $4,000. To claim the overtime deduction, you'll need to fill out the new Schedule 1A form, which the IRS created for this and other new deductions. The total from Schedule 1A is reported on your Form 1040. Remember, these are below-the-line deductions, so they reduce your taxable income but don't affect your adjusted gross income. Always attach Schedule 1A when you file your return. Even with the overtime deduction, some taxes still apply. Social Security and Medicare taxes, FICA, are withheld from your entire overtime pay, and your employer matches these amounts. For 2025, Social Security tax applies to the first $176,100 of wages, while Medicare tax applies to all compensation. If you're self-employed, overtime pay is included in your self-employment tax calculation. State and local taxes may also apply, depending on where you live. For 2025, the employee's Social Security tax rate is 6.2%, and the employer matches this for a total of 12.4%. Medicare tax is 1.45% for both employee and employer, totaling 2.9%. There's also an additional 0.9% Medicare tax for high earners. Social Security tax only applies to the first $176,100 of wages, but Medicare tax has no cap. These payroll taxes are separate from your income tax and are not affected by the overtime deduction. If you're self-employed, any overtime compensation you receive is included in your gross income on Schedule C. This means it's also subject to self-employment tax, which covers both the employer and employee portions of Social Security and Medicare. You can deduct half of your self-employment tax from your income tax, but the overtime deduction rules still apply to the premium portion only. State and local taxes may still apply to your overtime pay, even if you qualify for the federal deduction. Some states automatically follow federal rules, while others may not. It's important to check with your state's tax agency to see if you'll owe state or local income tax on your overtime earnings. Don't assume the federal deduction will apply to your state return. For the 2025 tax year, employers don't need to change how they report or withhold taxes on overtime pay. The IRS recommends continuing with existing procedures to avoid confusion during the transition. However, employers should prepare for new reporting requirements starting in 2026, when overtime pay must be separately reported on tax forms. Employers should update payroll systems to capture and separately report qualified overtime pay for the 2026 tax year and beyond. This includes reviewing FLSA requirements, verifying employee eligibility, and training staff on accurate timekeeping. These steps will help ensure compliance and make it easier for employees to claim the deduction. Yes, overtime pay is taxable and must be reported as income on your federal tax return. However, the new deduction allows you to subtract a portion of your overtime pay from your taxable income if you qualify. If you're not eligible, or if your overtime pay doesn't meet the requirements, you'll owe tax on the full amount. Payroll taxes always apply, regardless of the deduction. The deduction lets eligible workers subtract up to $12,500 of overtime pay from their federal taxable income, or $25,000 for joint filers. The deduction is phased out for higher incomes and only applies to the overtime premium portion. This means you can't deduct your regular pay for overtime hours, just the extra amount required by federal law. Yes, the deduction applies to overtime earned starting the 1st of January 2025. For the 2025 tax year, your employer may not separately report overtime on your W-2 or 1099 forms, so you may need to rely on pay stubs or other records to calculate your deduction. Starting in 2026, separate reporting will be required. Only the half portion of the time and a half pay is deductible. For example, if your regular pay is $30 per hour and you earn $45 per hour for overtime, only the extra $15 per hour is deductible. You cannot deduct the regular pay you receive for overtime hours, just the federally required premium. If you have a simple Form 1040 return, meaning no complex schedules except for earned income tax credit, child tax credit, student loan interest, and Schedule 1A, you can file for free with TurboTax Free Edition. About 37% of taxpayers qualify for this option, making it easy to claim the new overtime deduction if you're eligible. Examples of simple Form 1040 returns include W-2 income, standard deduction, certain credits like EITC and CTC, student loan interest deduction, and Schedule 1A deductions for qualified tips, overtime pay, car loan interest, and seniors. If your tax situation fits these criteria, you can file easily and claim the overtime deduction without extra paperwork. If you need to itemize deductions, report unemployment income, business or freelance income, stock or crypto sales, rental property income, or other complex credits, your return is not considered simple. In these cases, you may need to use a different TurboTax product or consult a tax professional to ensure you claim all eligible deductions, including the overtime deduction if you qualify. TurboTax offers several calculators and tools to help you estimate your tax refund, calculate your tax bracket, determine W-4 withholding, and estimate self-employment or crypto taxes. These resources can help you plan ahead and make sure you're taking full advantage of the new overtime deduction. Use these tools to stay organized and avoid surprises at tax time. Filing your taxes online with TurboTax is secure and convenient. The platform uses advanced security measures to protect your personal information. You can file faster and easier using the TurboTax app, available on the App Store and Google Play. Whether you're a new user or a returning customer, TurboTax makes it simple to claim the overtime deduction and maximize your refund. TurboTax Free Edition allows eligible users to file simple returns at no cost. For those who want extra help, TurboTax Expert Assist offers unlimited advice and a final review by a tax expert, ensuring you get your maximum refund. These services are designed to make tax filing stress-free, especially with new deductions like the overtime benefit. To get the most from the overtime deduction, keep detailed records of your overtime hours and pay, review your W-2 or employer statements, and use TurboTax tools to estimate your deduction. If your income is close to the phase-out threshold, consider strategies to reduce your MAGI, such as contributing to retirement accounts. Staying organized will help you claim every dollar you're entitled to. Don't assume all overtime pay is deductible, only the federally required premium portion counts. Double-check your calculations, especially if you receive comp time or higher than standard overtime rates. Make sure you're eligible under the FLSA and have a valid Social Security number. If you're unsure, consult a tax professional or use TurboTax Expert Assist for guidance. For more details on the overtime deduction and other tax law changes, visit the TurboTax website or the IRS site. Both offer up-to-date articles, FAQs, and downloadable forms. Staying informed will help you take full advantage of new tax benefits and avoid costly mistakes. The One Big Beautiful Bill introduced several other tax changes, including updates to the SALT deduction, energy credits, and new deductions for tips and car loan interest. If you qualify for multiple deductions, be sure to review all your options to maximize your tax savings. TurboTax can help you identify and claim every deduction you're eligible for. The overtime deduction is currently set to expire after 2028, but Congress could extend it. Planning ahead is important. Track your overtime pay each year, monitor your income relative to phase-out thresholds, and stay updated on any legislative changes. Good tax planning can help you make the most of available deductions and credits. To recap, the new overtime deduction allows eligible workers to deduct up to $12,500, $25,000 for joint filers of qualified overtime pay from their taxable income for tax years. Arling ar wu, da arling ar ba. The deduction is phased out for higher incomes and only applies to the federally required overtime premium. Payroll and state taxes may still apply. Use TurboTax tools and resources to claim your deduction and maximize your refund. As tax season approaches, gather all your pay records, review your W-2 or employer statements, and use TurboTax calculators to estimate your refund. If you have questions or complex situations, consider using TurboTax Expert Assist or consulting a tax professional. Being proactive will help you avoid last-minute stress and ensure you claim every deduction you deserve. TurboTax offers a range of support options, from live community forums to one-on-one expert assistance. Whether you're filing a simple return or have more complex questions about the overtime deduction, help is available. Take advantage of these resources to file with confidence and get the best possible outcome for your tax situation. Tax laws can change quickly, so it's important to stay informed. Subscribe to updates from TurboTax or the IRS, and check for new articles or guidance each year. Being aware of changes ensures you don't miss out on new deductions or credits, and helps you avoid costly mistakes when filing your taxes. While TurboTax provides powerful tools and expert support, some situations may require personalized advice. If you have unique circumstances, high income, or questions about eligibility, consult a qualified tax professional. They can help you navigate complex rules and ensure you're making the best decisions for your financial future. Thanks for watching. The new overtime deduction is a valuable opportunity for many workers to reduce their tax bill. Remember to keep good records, use TurboTax tools, and stay informed about future changes. With careful planning, you can make the most of this deduction and keep more of your hard-earned money. Good luck this tax season.